Nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable part. You can't see that. I wanted to share something. I said everything is a fractal, including yourself. There's a cool little science experiment you could do with your kids at home. What you could do is you take some, it doesn't show up. But what you do is you take a drop of paint and you place it on a clear piece of plastic, and then you press it down, and then you quickly lift it up, and what you should see within the lines within are kind of fractals. Let's see if we can get the blue one up there. There we go. You get these tributaries and branches. The other side is green, so you can't see it, but what you'll see is basically how, you know, everything is just a image within an image of a fractal, and there's fractals contained with this that contain the entire pattern. I just thought it's pretty interesting. It's a very simple art project / science thing you could do with your kids at home. Anyway, thanks for coming on into the live and sharing your essence with me. I was originally having the pitch fan, of course, here, this has been here for a while, since we were starting to make our way out of here, and I was seeing it in this channel. I was having it in this region. Now you can kind of draw these at different lows and highs, like you have a lower low from this time frame, and then a higher high on the entire, and then you made a lower low, and then from that information it draws these mean reversion areas with the pitch fan here, and they're basically Fibonacci in nature. You can get them to represent different values, and different colors represent the different values. I have the outskirts of the 706 representing zones here where they would be looking to get interest in and get out potentially. And so previously I had this other one for the downshifting idea over here. And it had bounced off these levels quite nicely, but I was looking at realistically, if we were going to come down to that point, it's we could use this point again, but I was moving this over here. Let me just do it fresh so you can see how to do it yourself. So I was doing this from the high here to the low there, and the low there, or high there rather, and we're kind of, it gives us the 3 bounces off of that, breaking through here. And we already went over how this kind of was a trend-based fib extension level. So we go to the trend-based fib extension tool, we go from the high impulse retrace idea here, and that was where we bounced at the 1618. And we've gotten above this mean reversion level, so we dipped into the, if you look at this solely as a mean reversion trending to this region. So are we going to drop down to this region here at the 21.5, or are we going to try to go up to the area up here and test this region as we talked about over the last few days? That is the question. So we had previously seen, let me put this, so that would put you somewhere in there. Just an interesting idea. So before we get into a regular chart without all this on there, let's just go into the liquidity. So we're still imbalanced to shorts by 6.3 billion on this 6-day 1 minute time frame. It's a 1 minute time frame with 6 days of data, and as we've been seeing these bubbles get taken and retraced after that point, similar to, we were talking about this guy, and they came back and got that 176 million and then went back and absorbed all the longs here, and then they have been just inducing more in the entire time, and we've been seeing more longs enter and more shorts enter. It's been pretty even thus far from what I can gather. Hasn't really changed that much. They have thickened up this region a little bit. It's a little bit thicker with the bubble values. Alright, so you have a little bit more up in this region. We were talking about 176 million up here at 23K, the 23,174 region for this entire band to get taken. That coincided with the Fibonacci retrace tool, which is here. This entire region. Somewhere up here. And yeah, let's go to the chart without the pitch fans on there. So just taking a look up here, we were talking about how if you came down into the smaller pocket here, you could feasibly take a long trade. So if you bounced off the golden pocket, 618 region, which we ended up doing here again for the third time now. We went down into this region quite a ways, recovered this vector over here, at least to a degree, and then we started to bounce out of that region. Now, what are we seeing now on the in terms of we're having this front run multi-time frame divergence calculation that I'm not sure about necessarily speaking, but it does kind of front run divergence sometimes, and we're seeing bullish divergence on that, which started to play out. But let's look at the higher time frames first and foremost. So we had the weekly candle close, so let's take a look at how that transpired, shall we? So the weekly candle close did not really give us back so much stochastic data. If we go, let me close this. So we started up here at 23,577. We rose up to the 6.5 of this bearish trend-based fib extension tool, which you would have had back from this week. So you would have seen that rejection at 24K at the high, and we closed all the way down beneath the 1382 on the weekly at 22,432 after dropping down below the 1618, as we all have seen. And the stochastic didn't really give back so much. It went from about 87 to 80. So it gave back about 7 points of stochastic data. And it took your Williams out of the red a little bit and flatlined around the -20 region, which is still in the overbought area. So let's go to a lower time frame. First of all, let me throw on ultimate so I can just get a view of the time frame. So we got 86, 3 days 6, daily is 2, 4 hour 89. So you got the 1 day and the 3 day in your favor, weekly and the 4 hour on the higher timers, pardon me, is overbought. So let's go to the 3 day, shall we? So the 3 day Williams is giving an alarm clock, which is interesting to say the least. On it's overbought, even though it's oversold on the stochastic RSI. And you had this bearish divergence, which ended up playing out slightly, and we've come down on the RSI as well on the 3 day. The 5 day chart, as somebody pointed out in the Momentum Master Discord, the 5 day closes in 10 hours, and the 5 day did have a cross on the Momentum Master A to the for a downside cross. So something to note on Momentum Master is you have this cross on the leading moving averages that do play out. So if it closes with this cross here, then you can expect some downside to occur. So if we don't manage to push up and push this over across, then you could see some more downside. So when these things on the 5 day cross over, for example, here, you have these things play out. So it's kind of, these baselines are fractal-like in nature. I remember Peyton pointing out on the 8 hour when we first started to cross above on the peaks up here. So we had this was your first sign of weakness on Bitcoin at the top, and you got this crossover, and he was pointed out, and then when you get this double top, that was where we never went above technically. So every time you get the crossover on these baselines, you see it go in whatever direction, whether it's crossing up or crossing down. That's why they're leading. So we have an 8 hour cross up, which is what's kind of staving off some dump here. We were talking previously for the last 2 days how the 4 hour has been pinned and how that has not given a reset back. What does it mean by being pinned? Well, you have the stochastic RSI down here. It's kind of staying meandering up in overbought status. And does that mean we're going to dump necessarily? Not really, because you had the other time frames on your side with the Williams good to go, as you did on the 6 hour and above as well. So you had a 6 hour cross that confirmed, you had an 8 hour cross that confirmed, and you're getting these higher time frames. You have this bullish divergence on the 8 hour money flow too. So check this out. So the money flow has a higher low on the 8 hour. This is regular bullish divergence on the money flow. You had a low down here and a higher low here, and the money flow is starting to come back in above the RSI. So this is bullish divergence on the 8 hour from back here, from here to here. You have a lower low on the price action, higher low on the money flow. That's bullish divergence. So we have confirmed bullish divergence on the money flow on the 8 hour time frame. Interesting. And you also see it on the 12 hour time frame from here to here. So we have the higher low on the money flow, lower low on price action. So this is bullish divergence on the money flow. Okay. You got the Williams about to cross. At this level, it will give you a rising sun on the 12 hour. The 12 hour has yet to see its day, its time in the sun. So the 4 hour, this is where your higher time frames start to double top your price action here, and you don't necessarily need to short this because you haven't even seen the Williams come up just yet. So you have the Williams rising sun here, and it could take you up to the upside. This is where you see these kind of resets and these double top scenarios when you have more to give on the Williams and you have more to give on the Williams. So just stochastic RSI traders alone don't get this picture. If you want to find out more about Momentum Master, just check the link in the description. It has a schematic which you can toggle and read about all of the components, well, nearly all of the components. We have a lot more than what is listed there, but all of the key components are listed there. So yeah, the 4 hour looks like it could curve up here, and looks like it is doing that. And what does that mean? Well, that momentum could take you up to the circle region we've had for the last 2 days before coming down. Nothing is a guarantee. It's all probability. So you look at the lower time frames here. Let's see, where's the stochastic? So you got the hourly trying to make its way above 50 to surge up here. You got that front run divergence. I don't know how accurate it is, but it sometimes gleans some information not privy to everyone else, because it's multiple time frames of data. So you have this bullish divergence over multiple time frames averaged on the hourly. And yeah, let's go to the 15-minute. So this is why you find these confluence zones and you just see what it does. You would have gotten this 5 on your phone at about 1:30. We posted it in the Discord. We were talking about here. We said there's a, we got the alert on our phone. We gave out the image saying that it's at that region, and it's bounced off that region quite nicely, and you're getting kind of these confluent zones. So if we can maintain this cloud to turn thin, as we've seen, and we're bouncing off of it, and we can go above this weighted moving averages and go up to the top of this channel and come down. Like, remember, once you break through the cloud, you kind of come back and then you retest and then you're gone. So there could be multiple scalp opportunities when you reach the top of this zone area here. So let's look at the liquidity here. If it will load for me, let's see. Let's see how. Oh wow, 38 views. Thank you all for coming on into the live, sharing your essence with me in this eternal moment of which we all share an inextricable part. Thanks for coming on in, guys. So you do have a lot of longs here. You got more stacked 100x than you do up here, but yeah, I'm not liking this little bit of happiness down here comparatively. But if you look at the amount here, yeah, it looks like there's more. It's about even Steven. No, it's a little bit more in 100x down here than up here. But this is, you know, when they decide to make a run, they ignore these guys, and these become the lucky campers if they decide to go up and grab what they were going to grab. So let's take a look at this and zoom in. 55 million, 20 million, 17. So, I mean, you got, like, in that same time when you get 24 million here, you got 58, 61. So you could see how the bubbles are bigger on this side. And they didn't get this guy just yet. They got this 61 million guy, and then they came back down and they attempted to come back for this. And there hasn't been really any new bubbles in a while, at least on this 1 minute thing since back here, really. So everyone's kind of waiting, it looks like. At least what's displayed here. I think we did a good job of doing the heat map over the last few days. We're going to go to the yearly and just reiterate what awaits above if we do decide to go up. What is holding us up exactly. So this yearly time frame on High Black shows trades all the way back from a year ago. And so you have liquidity pools all the way from May over here that have been thickened. And you have, you know, 84 billion at 34.8, for example. And you see how those thicken over time. And same with August 14th, you have, you know, pools that thicken all the way to 178 billion now. So in this region here, you have 178 billion dollars waiting to be released at 25.6, 104 at 26k, even 72 billion at 26.4, 26.8, 126, 27.2 is 73 billion, and 121 at 27.6, 74 at 28 even, and so on and so forth. And so you get these zones up here that are getting caked pretty thick. And I was really, as I said, I was really shocked they didn't come and get this when they had the opportunity to just jump up a few $100s to take $162 billion, and they didn't. So the fact, if they would leave that for good and just head down to 10k, it doesn't make narrative sense to me for them to do so, although anything's a possibility, obviously, because they left it here that time. And they did the same thing on down here, where they left 100 billion at 15.2, and they never tapped it again after getting their fill off of all these guys that they induced from the double bottom idea at 19k here. So this yearly chart is one of my favorites because it shows the game of traps that trading is, where it induces one side to believe a narrative structure, and then it comes and takes their liquidity and then goes in the direction that they hoped after taking them out of the game. And same with the shorts, they expected more downside to 10k and beyond, and they just got gobbled up all through January. So everyone's kind of thinking that we're going to break this range. Are we? I have no idea. I always say, you know, you have no idea where price is going to go. So it could come down into this region and grab these pools down here. But eventually, I feel that it's based off the liquidity and all the back testing we've done with this, that it will come up to this region in the near future. So yeah, I mean, we looked at the 3 months, so we're going to just jump right to the 3 month chart, save you some time. So you had these thick pools down here totaling a couple hundred billion. And I was looking at the idea of, if we come up to this region, there might be one more tap down to here before we go up, and you'd see like a go up to go down kind of deal. So you'd see something like, in general, we put it out earlier, I don't really change my narrative on that necessarily speaking, like you'd see the 22 and the 12-hour play out in such a manner where it would come up to here and then get rejected at some point and possibly come down and tap into these pools before going, on its journey up there. So you could see false move Monday take you up and fake everyone out that we're bullish again, and then Tuesday, Wednesday leads us down. Midweek reversal is somewhere down here and takes us out, with run for profit being to the upside of some nature. I don't like to speculate too far into the future. We're just crossing one bridge at a time, and right now it's that pool above based on the liquidity and the bubbles that we've seen pop time after time and time after time again. And currently you have this guy up here and you have the imbalanced shorts, so it would make more sense to at least grab this pool and stop paying them before they go lower, in some way, shape, or form. So let's turn off the liquidation levels and take a look at the dollar and S&P really quick. Let's see how these are going to play out in a certain manner. So we had the bullish trend-based fib levels, or we had the retrace levels that we bounced off of at the 706 here, and we were talking about getting that bounce, and that happened, and then we said we might get a rejection at the 786, and we sure did, and then we bounced off these 618 here. So where does that leave us? We got the 4-hour reset. The daily is still in a good position. The 3-day and the weekly are getting overbought, but from what we're seeing here, you got the adaptive moving average right beneath the price like this. You're right on the 618 region. So this is kind of like poised to go up based off of all of these time frames, but let's go to a lower time frame to see what we're getting. So you had 6 time frames oversold, you're getting 6 and 5 oversold. And yeah, like we're having a trouble getting into this area and getting overbought before we get there. So in terms of a bullish projection for the dollar, you have this impulse that takes you up. You reach the top here, and then you retrace it down to here. And so this is the bullish trend-based fib levels, and that's where we're at the 0.65 we just got rejected at. So we could come back down into the local impulse fib level here and look for some sort of bounce, although you could be making some sort of M formation to the downside, to the back to the 236 as well, or one of these vector candles. And you could even do a bearish, since you have this double top idea, you could do the same thing over here. And that coincides with the local fib, so this 65706 region. If you can't stay above that, then you could go down to some of these levels, the 1382. If we can't hold this region, this immediate 618 region on the dollar, which would ideally see a bounce for Bitcoin, as we said. And so we go to the S&P, and we got that bounce off the trend line. Where is this trend line coming from? Well, we've had a wedge that it's been in since back here in December of 2021. This entire wedge that it broke out of. Let's turn off the indicators really quick because too busy. So we had this trend line that it was in, and this kind of broadening wedge, it broke, it created a cup and handle, inverse head and shoulders on the handle, broke out. We were saying if it can't hold this trend line, it can come back to here. It held. It was also the bearish trend-based fib extension level of 2, and it bounced off that perfectly. And now we're seeing what time frames are overbought. Now we can get into the minutia. So you would have gotten this alert on your phone if you trade stocks. We're currently at the cloud on the 4-hour, which could provide some resistance here naturally, as we see, because you had this momentum to break through of sell-off volume. This is a volume-based trend cloud, by the way, so the trend cloud kind of reflects the volume leaving and entering, and so it thins out and it becomes harder to reverse at that point. So you ignore some of these things when you see these other things in confluence. But we broke the ATR here, so that's kind of a bullish sign. You could stab up through this if we go to the higher time frames, which most likely it has leg. No, it's overbought on that too. You had the rising sun in effect for the 6-hour. The 12-hour is just getting started. So if you can hold above this one level, which also happens to be the adaptive moving average, and get above this cloud, which is meeting resistance on as well. So you have a double cloud resistance on the 4-hour and the 12-hour here for the S&P. It kind of needs to get up to here and then retest to continue. If it fades at this point, then you kind of go down to the next level here. So you got 3 time frames overbought, the 1-hour, the 4-hour, and the 6-hour by the looks of it. And you get these, this is pretty nice confluence if you get the adaptive on the hourly and the weighted moving average on the hourly as well. If you break beyond this, you are outside of the Keltner channel, so you wouldn't really get, you get out of it, but then you always come back into it. You always come back into it. If you get too far out of these, Smurf and them call it the K-hole. If you get out of the K-hole, you come back into the K-hole. So it's here's a case where you went pinned up and it followed you up there and you chilled out. So it's not immediate necessarily always, but it's a good measure to sense where fatigue is. So you'd see like the ascending channel, it would come back and then this would come up with it. And you go to the lower time frame to see where that also occurs. And then you start to see the baselines going above the price, which shows a kind of inability to maintain the momentum up. And that's when you start to see these crossover events on those leading baseline moving averages like this. And then it starts to go down. So if you get that happening and it can't get above the baselines, then those become the first level of resistance, hence the baseline. It's the baseline support and the baseline resistance. And yeah, looking at, we're getting into too low of a time frame here, but basically it opens in, did it open already? Yeah, it did, didn't it? Not yet. 30 minutes. So you reached up to this level here. Could you clear it? You know, even a slight gap up. Yeah, so it's these moving averages. If you can hold these moving averages and hold this level, even though you're overbought, it looks like on 7 time frames here. It's all about maintaining this and breaking through this resistance level. Can you break through? You're getting a lot of volume, cumulative volume leaving here. If it maintains this level with this volume leaving, that could be like a sign of hidden bullish. You have the suppression coming from the higher time frames to the upside. So that's why the finger's pointing there. You have higher time frame support, which looks like you probably have the daily and the 22 in your favor. So it wants to continue higher, maybe up to this BPR fair value gap over here. So if it breaks through this resistance, it could keep going up a little bit, just as the dollar is kind of retracing down into this region here and figures out what it wants to do. So you're getting the inverse here, the suppression on the higher time frames to come down, and the higher time frames want to tell you to go up. And the cloud coincides with this region here too. So it still looks like, you know, while we've been doing nothing but go sideways, we still have these crosses that have been coalescing on other time frames as well. So you're getting the 6-hour cross and the 8-hour cross. And the last time we had an 8-hour cross up here, we dropped. And the last time we had an 8-hour cross here, we dropped. And the last time we crossed over here, we went up. So is it a similar situation to this, where we crossed up and then it goes up a little bit, creates a liquidity grab, fakes everyone out, double bottom up? It's false move Monday, anything is possible. But in the end, it went up. So is that what it's going to provide us with? Is it as a better entry for a long? And go somewhere down in here and do an extended W. Before they go up to that, you never know. You never know. You always create a plan and execute when it reaches a certain level. That's why you do your own diligence before entering any trade. And you got the adaptive and everything coming up to a point of interest here as well, which is noteworthy on the 8-hour. So the interesting point about this is we never really broke the thin baseline, which sticks really tightly to price. So this is kind of creating its journey out, if you will, ever so slightly, while inducing more liquidity in. So it's trying to induce as much as it can to cake up a region. While this region is fat, this one has a lot more thick liquidity up here, so this looks immediately more the cup of tea of the direction it will go. And we've been saying that consistently all weekend. And we talked about how you could take fib retracements of different impulses, break of structures here. So you could just take this, go up, and get those golden pocket regions for where you to expect to bounce. And you could have been scalping these with that in mind all day, with stop losses into profit. And so you just put your stop loss like this into profit, and then look for kind of entries again and again and again. And then you could set your take profits at certain resistance, and so on and so forth. And that is how you kind of play these crossover events, these leading moving averages on Momentum Master A, in conjunction with the K-hole, the Keltner channel, and how you get to the bottom of it and you like to gravitate back up to the top And you have the adaptive moving average and the trend cloud and the ATR, which also acts as kind of strange resistance points that on other time frames as well. But the interesting thing here is, like, we had, for example, this fib level, this bearish trend-based fib level. So we're going to turn off the indicators really quick, just to reiterate one more time how interesting these trend-based fibs are. So we'll just delete it really quick to show you how to do it again. So you find trend-based fib extension level tool. You can find it under your fib retracement, and you click it. And for a bearish projection, you take the impulse of the drop and then the retrace, the attempt to rise back up, and even if you expect it to fail there, and that's the high, then the 236 point is your entry. And so when it started to drop below that on the hourly time frame and then bearishly retest that 236, it never came back to that point again. So it's a very interesting tool to gauge bearish projections or bullish projections, because you can see on the 236 confirmation that it's going to go down to this region, and then you could just look for re-entry or kind of gauge based on where it fades, like you take profit and then you re-enter off of failures, which would also be most likely like 618 rejections here. See that? The 618 rejection. So you could have taken profit on this, re-entered on the 618 here, and then most likely the Momentum Master is also like giving you these. Oh, we had the nuke, that's right. We had the first nuke of the thing appear on the hourly, which was amazing. And it appeared right at the exact top. There were guys in the Discord that pointed that out, I think. It's pretty amazing. So we had the first nuke since the rocket ship appeared, and then that was where we started to reverse. And so you would have gotten these like overbought signals, and if it coincided with your other confluence, you would have just taken it down, and you would have ignored these because you had the higher time frame now turning against you, and it started to go down out of that region. And you would have been able to see, you know, once it broke down out of here, that the bearish trend-based fib levels were being honored. Let's get out of it. Come on. There you go. And then it came back and it got rejected off the 65706 level and dropped down out of the 1. So you have that there, and then it came down into that 1618 region and stabilized within these two fib levels, and it's just been range trading between the two fib levels. And so you would expect it to at least come back to the next fib level again, if not challenge to, you know, go up to this region or break through and then retest and continue. So yeah, basically the hourly is in play right now by the looks of how it's curving above the 50. But yeah, it's pretty cool. I'm ready to look at something else if you guys are cool with it. I think we've done a solid analysis of Bitcoin and the markets. So let's see what you guys are looking at. We were looking at AGIX. I was seeing that it's not a place where I would necessarily buy, but I was saying it would come down. Yeah, I was saying it would come down to here and you'd look for something to occur, which it did really. It did kind of come down to there. And if you put this at the regular fibs, if you change it back to a regular fib, that went to the 886 region, and then you got that 5, and then you could have been scalping that if you were so inclined on AGIX. And we said that the other one with the I think it was, we were looking at man too. We looked at man for somebody. Oops, What? Why did I? We're looking at man, and the other one was man. So we were saying if it can't hold this 236 level, then expect for this to not occur, basically. Like you needed to hold the 236 for this trend-based fib level to remain. I mean, this was just a smaller kind of scalp idea, but this is how you would use these to gauge bullishness continuation ideas. So the trend-based fib extension tool kind of sets you up for putting that impulse retrace idea and where to look for that to be true or not. Is that still possible? Is it possible if you go to, you know, we're still at the 706 region, so you're not out of the game just yet. We'd like to see it go back above the 236 and hold it for this to be true, but it's still flirting with the idea of going down lower. And we had Swing B, I think it was Swing B. We were talking about trying to find a better entry for that because Swing B was possibly, it broke out. So we had the rocket ships appear, and we had the rocket ships appear a couple times, and this was on Sunday 6 a.m. So this was this morning. So we were talking about, we were saying it was overbought and getting rejected off of a fib level and the adaptive. So we were saying look for a better entry as the hourly reset itself. So where was that? What was the time frame we were looking at? You did get that bounce, which was nice. But we were back here. Yesterday we were here and we were saying find a better entry. So we suggested getting out and looking for that better entry. And sure enough, it printed another rocket ship and you saw it go up for 36% gain. So if you had entered that and saw the resistance at the 236 here, you could have taken profits at the top of the range here. And then we were saying originally that it would come out, if it was bullish, it would come out and bounce off and continue. But it looks like it fell back into the pattern. But we went over in detail how these rockets play out in the past, and if you just let them percolate a little bit, you could stand to have, you know, larger gains if the market is ready for it. So the market conditions weren't ready for it necessarily here, but even if you just take these here and just stayed in, you could have gotten like 94%. And then here this rocket played out for, you know, a lot more. And did they always play out? Not necessarily. If Bitcoin's being manipulated back in May when the Luna liquidation event occurred, then you have, you know, black swan type things. But in general, for the most part, they do play out. So, and that's pretty much on any asset in the world. It's a pretty interesting formula. I saw somebody posted where they tried to ban the use of the rocket emoji for trading or something. I hope that's not true, but I mean, how is that? How can you ban an emoji? So yeah, we're still kind of hoping that this comes up to here based off the technical analysis of the liquidity pools and everything. So let's take a look at, see what you guys are into. Let's take a look at the comments. Let's see. Your streams are great, Danny. I can feel the positive energy vibes, calm and cool, collected. I love these. They're relaxing. Thank you so much. Thank you. S&P looking like strands for a scent party. Bread. Nice. What's up, Smurf? Yo. Amphibious. GM, did anyone see rockets on Sol this morning? Ah, yes, the K-hole. It's very strong. Matic. Let's take a look at Matic. I want to see Sol, and then we'll go to Matic. Let's go to Sol. Oh, it looks like we're getting this surge out. We'll come back to it, see how it holds. Our stop loss is in the profit anyway. And yeah. Oh yeah, you did. So you got a rocket on Sol on the Sunday time frame. Let's go do some proper analysis, shall we? Let's turn it off first. So you're not meant to have these on necessarily all the time. They consolidate. So the best way I can put it is, okay, you go to an art gallery and you're given a worksheet. You're told you're going to take a test on the information contained at every person's art. So why would you go running from room to room, taking a pic, like looking at Monet and looking at Picasso and looking at this to try to cram for the test? Take a picture of all of the blurbs of each painting and then bring that data together and then look at it just without having to run around like a wild man all the time. So that's what the indicator does, is keeps you from having to go between time frames. So once you get what you're looking for the Fibonacci and stuff and getting precise with the wicks and everything, then you can kind of like look at different ideas in terms of those indicators thereafter. You don't need to have it on all the time, but it does help you in the alarms that it gives and all that stuff. Let's see, so the daily? I mean, that's the larger retracement zone, but we're not looking to do that. We're just looking at the current from here. So you're getting to that 886, which is a pretty safe level in terms of, you know, last resort zones of support. And this also happens to be let me see something really quick. I just want to try something different here. Whoops, wrong one. Pitch fan, where is it? There we go. And yeah, so you're at this 886 level on a falling wedge, complete retracement. They actually have Sol on high block, so let's look at that too while we're here. So you can go to the liquidation levels and pull up not just BTC, you can do altcoins like Matic too. I haven't done that at all here on the live, so let's do it. Let's try something new. So we can go to Sol and see where the liquidity lies. Where is it? Sol, boom. So you have about 155 million in shorts waiting to be grabbed in balance up here for Sol. You have, if we zoom in here, you have about a bunch of million little long. See how the bubbles are smaller because it's an altcoin, so you can barely see the bubbles, but they're $1 million caked in here and there, here and there, here and there. So in the immediate time frame, it looks like they're going to get this 1.51 million guy up here, and there's gap in liquidity down here. So they could have already started to make their ascent to grab this imbalance of 155 million. So let's try to look at where that would leave us in terms of stacked pools of liquidity. It looks like the top of the range here at 2215, or conservatively speaking here is really thick, so that's 2178. So, and this also coincides with the rocket ship that we received around 5 a.m. my time, which was just before the close. So you're getting a 5 time frames oversold here. Sol looking good for at least 2. One more time, we're going to look back at this. It was, wrong one. It was to the caked region, which was here. 2180 or so. So let's just say 2180 is here. That would put you at the 706 region. So in terms of like a scalp, you got the 15-minute not in your favor right now. You could come down and grab some of these, but you have a gap here. So it looks like it's chosen a target to at least go up to there, but these are 35x. There's 50x down here too. But look at how interesting the rocket, like you had the rocket like literally like not too long ago, and the last time we had that, you know, you had 4 of them and then a little bit of drawdown before it surged up for 7 or 7.45%. So you're getting that again, and it's just around that 886 region. So you could see it kind of dip down back again, try to double bottom, kind of play around in this region. And then if you reset the 15-minute in a nice manner, you could see a nice little bounce for Sol. Interesting. We had the nuke there too. So if you had to put it, I mean, you'd take that from the 886 and then let's just reverse it in the opposite direction, shall we? So we're going to do something like this. So let's just say this is the retracement and it's completed its retracement, right? So we can look at, we've already confirmed this is an 886 on this one, but so if you're trying to chart your way out of this retracement, this is how you would use the retracement tool for that. And you'd look for 236 to hold, and basically from there you could ride that up to, ideally speaking, you could ride that up to like the golden pocket region. And so that would be your kind of like target in a bullish manner for Sol, for like a healthy retracement, if you can hold the 236 here. If you can get out of this region and hold it, so if you can come up here and hold and go higher, and then each one of these regions could be like a place to consider moving a stop loss in the profit or taking profit before you go up to here. It doesn't always just go straight up. So that's how you would use the Fibonacci. You draw it in the direction of the impulse or the direction it's going, and then it leads you to this chart of information out of the retrace if you wanted to see it come out. So you'd want to see this go up to the 236, which is about 6%, and then go up there and hold it and not give it back. And then that would be your kind of entry level for a larger play out of there. If you want to just paper trade the rocket and just see what it does, you can come back to this in the future, but let's just leave it there. That's for Sol, and let's look at Matic. daily. So it looks like we had a retrace too, like a lot of healthy retraces going on. So you have essentially, we take the retrace tool from here to here. We've reached in, we could get a 618 bounce. Let's just start proper. So and we could just turn this to the pocket. Let's take a look lower time frames. I like that everything's already reset nicely on Matic. It's very nice. We're reaching the bottom of the Keltner, which would coincide with the pocket. So here is looking like a really good confluence region. You got the weighted and the adaptive in your favor. This is looking really nice for Matic actually on the daily. You get this rounded out price action. It rode up with the Keltner, now it's coming back without hesitation. We can look at the liquidity for Matic as well if I'm not mistaken, so let's do that. Matic. Here's my little, you can't see it because he's green. I wanted to show you my caterpillar thing that I made out of a straw. So Matic, wait, what? Yeah, okay. So we got 211 imbalance to shorts. So we could be seeing the shorts get attacked right now. And you'd look for that caked region up here at 119. 119, where would that put us? So you could even take this bullish trend-based fib thing and just go like this. Because we did retrace a little bit into the cloud there. 119 doesn't put you necessarily there. So you could come back to the retrace idea. We're going to remove that. That's something you could look at later, but for the time being, let's just retrace and assume that we're at the bottom here. And we do the basic. And then 119 would coincide with the 236. So we could come up to that point to get that liquidity. Do we go down to the 618 first? What's at the 618? The 618 value is 10638. 10638 would put you at, they don't really show it, but it would put you down here. So do they grab all these longs before they go up to this, or do they just go grab some of this 200 million that's sitting there in short liquidity? Once again, if we change this to the basic, it's going to show you that we're in the golden pocket region for people to take profits on the shorts, which would force them to kind of go lower. It would cause a bounce initially, which would induce more longs, and then they would do a liquidity grab down to here. So for me personally, I would wait patience for that nice entry down here, but that's just me. You could scalp it the entire way. It could take off right here, but I'd like to see it come to this pocket region personally. But you're getting 6 time frames oversold with the baseline beneath the price here. So you're getting the baseline beneath the price, double baseline cupping beneath it really nicely on the 4 hour. You could see like a little bounce, just like everything else is having, kind of. The hourly, it's the hourly time frame that's trying to play out right now. Go to the 15. I'm gonna remove this really quick. So yeah, I mean, it looks like you're getting that kind of exhaustion on a multiple time frames in terms of like a positional kind of surging out. It looks like Sol and Matic are looking to kind of have a run up. potentially. They were having a nice healthy retrace down, and now they're getting oversold on multiple time frames. The daily, the 3-day, the weekly is even getting okay. You still have room on the 4-hour to go, and the hourly. The 15-minute is extended, but you're getting bullish divergence on the money flow here at the 6. So you had this bullish divergence on the money flow. You had it twice, and you're getting the 6 time frames oversold. I like what I'm seeing for Matic. You got above the cloud, and what do we say about the cloud when you get above it? What happens? So you go above the cloud and then you retest the cloud. So you go up here and then you come back and then continue. And so that will thin out and start to curve nicely in such a manner, and then this would be kind of where you would think to get in if everything's coinciding nicely with the SR flip of this cloud. See how you get it? It's thick, right? And so if it's thick, your chances are of getting rejected off the thickness of it just increase, and then you have these interactions with the cloud where we get rejected, and then we come up and we surge beyond it, which is interesting for bullish ideas, but you don't want to necessarily enter here. You got 2 time frames overbought, as the circle tells you. So you'd wait for this to start to thin, which it's already doing. It's already starting to thin in terms of selling volume, and then it will retrace in to try to grab some. But there's really literally nothing. I don't know how. Each coin trades differently, by the way, so you have to kind of like sit and pick a coin and try to see how it operates. So they're trying to take this 600, 700K right here, and then after that, after they free this guy, they might chill out and induce a little bit of longs and then do that kind of retrace that we're talking about. It's at the ATR as well on the 15-minute. So you'd be looking for like a kind of retrace down into the cloud, and then see how the 15-minute holds off of that, and then you could kind of think about a continuation idea for Matic. You're definitely getting 6 time frames oversold, and so yeah, you have this is already happening on the 5-minute. So it would come back, it came back and tested the weighted moving average, but you can come back realistically down into here too as this comes up. And then we talked about, what was the level again where they had the stacked liquidity? It was like kind of 119-ish, 119.3 to be conservative about it, which would put you about 119.3. Wait, what? That would put you way up there, okay. Somewhere up in there. And then so if you look at, let's see how the trend-based fib works on this little minutia. Like if we just did something like this, kind of puts you in that pocket too, right? Interesting. So you'd want to get above and hold the 113 region for a bullish projection to occur, and you'd meet with the resistance kind of on the weighted moving average, perhaps at the 786 here. And so these would be kind of regions to think about, you know, where you would either see how it holds here. I'll go to a Sol chart where these trend-based fib extension tools worked quite well in a past trade. So let's just go to the past and I'll show you how the trend-based fib extension tools work in an interesting manner. So kind of one last lesson before we're out of here. We'll just go back to here where I was using them all the time, like religiously. So we had here, we had been tracking the price action of Sol for a long time back here in, when was that? October of 2021. And we watched it get in this tight kind of trading range, and then we were watching the bullish divergence here, and then we did just that same thing. We did a impulse retrace idea. It kind of put us with this projected idea in mind. You know, granted we were in a more bullish sentiment at the time, but if we go to the 15-minute time frame, we'll just play out how that goes. So they went up to the 65706 region to try to get permission to go higher. There weren't people in the trade at that level. You had the 236 confirmation breakout of the range, surged up, got rejected on those levels, and then went up into the golden pocket, and then went higher. And then you could just have left that there from that point, and it projected out into the future how these levels are accurate and trade true. So it went to the 2 and then just started to come back. And so it was in price discovery at that time. So how do you figure out where it's going to go when it's making price discovery? Well, there you go. There's your answer, the trend-based fib extension tool. It just makes things a little bit more clean in terms of finding exact take profit regions or places to put a stop loss, and so on and so forth. So you'd look for this 236 to hold, and it looks like we're coming back to that region. As we said, the 15-minute was getting overbought, so you'd be looking for the 15-minute to reset and find some sort of entry below. Alright, so if we look at one last time the retracement here, so you'd be looking for ideally something down here would be nice, but we said anywhere so we'll just leave that there for now and just say that's where the liquidity is, at 119 region. So you might not get this entire thing, you might just get it to here. And we'll come back to that later. Anything else? Booyah. We said Matic, and what else? We saw Soul. What's up, Emery? How you doing? Druid Crypto. Any other ideas? Any other things you want to look at? Put under the knife. Anything at all. We're still, we went up to that region, which was here. We're talking about possibly getting rejected at that point. Surged up to that. So we saw that hourly close. With that in mind, we had that front running divergence, and we had some volume enter there. Let's go to the dollar really quick one last time. So the dollar got rejected at that bullish 6.5 region, and it could come down into this 618 pocket for a bullish projection, but if within this region, if it fails that, then you have the bearish also coinciding with that idea. So if it breaks down out of this, then this is where your outlook would be for a bearish idea. And yeah, last thing for the S&P, holding strong on these levels. We would look once again for these to fade as well. So it looks like Monday's they're going to recover this gap back here, this gap, and what they do after that point is unknown, but it looks like they're kind of dollars pulling back, S&P going up, Bitcoin possibly going up. All right, well, let's see, Wi-Fi. All right, let's take a Wi-Fi, and then I'll say good night to you all. Wi-Fi USDT. So they had this huge drop from Friday that coincides with what occurred everywhere else in the market. Let's just do something fun here. Let's just do this trend base fib. So you come up to the 236 and see if you're holding it. Just in terms of its struggling here. And then yeah, it failed out of that. So this is not accurate. So this is when, like, kind of the messiness here, like where do you draw the fibs, right? So like you could just kind of mess with where, okay, well, what did it do most recently? Like it dropped and then it tried to recover and it couldn't. So this kind of information gives you like a bearish sentiment. And then that 236 entry could have boom, knocked you down into here. And then you're just looking for like either like some sort of fade up here to continue down to there, just off of looking at that one impulse alone. But you're getting rocket ships on the Momentum Master, so let's give this a little bit more credence for upside potential. So you got 4 time frames oversold, the 4-hour, the daily, 3-day, the weekly are on your side, so this could be a good potential upside thing. And we had rockets that kind of played out before for 76% gains, and then we had slow acting rockets but never went below that point to 31%. So the rockets seem to work on this idea as well on Wi-Fi. So are we going to see some upside because of the rockets? Let's put it in a structure, shall we? So if you want to put it in a nice structure without having to draw anything, just click twice. Here's one thing you can do. You take regression trend, and then you click somewhere, and then you click there, and then it'll put it in a channel for you. Like, oh, okay, there you go. And then you can kind of like see where things are. You can extend it and kind of put it in a channel. You know, and then you can use parallel channels to do that too. And you can just kind of like go like that, like, okay, it's in a parallel channel, like kind of trending up. And you're getting a rocket ship on that trending up idea. That was pretty crazy how it went up, boom, like that in October. So I'm sure that's some sort of diagonal fib level, but yeah, you're getting the rocket ship here, and you could be seeing some sort of bounce on those time frames that are higher. Does Wi-Fi have a what's it called, like liquidity pool thing to look at? Yeah, you're getting kind of the 15-minute oversold as well, and the hourly is a little bit high for entry, but and the 4-hour as well. Getting a little bit of bearish divergence on the money flow here on the hourly. Williams is a bit high, so I would be looking for it to kind of come down one last time, but it looks like you have an inverse head and shoulders idea happening perhaps, and you have a kind of flip of the cloud kiss retest kind of coming up out of it. So if you already found something, if you already entered into this, you know, you could be coming out of at least into this candle similar to Bitcoin, and try to get some of this liquidity out, which would put you, you know, if you use, so the interesting thing about the poles that predecessor goes over is, let's say you take the pole and you drag it over here, right? And then you do this, right? And then you'll do the trend-based fib extension tool from here to here to here. And then it kind of puts you up in that region, but with more sentiment about where it could fade and where to kind of put like take profit 1-2 kind of thing. So if you're already in this, that would be kind of what you would look for that. And this is an entire vector, so you have that vector slash liquidity grab. It grabbed the sell side liquidity, created a vector, and then so you have these, the imbalance possibly retracing up to here for an immediate scalp, but you have a rocket ship, and that this nice bounce, the bearish trend got negated by bouncing off the 706 of that, not giving permission to go lower, basically. And so yeah, you have a potential to this region for Wi-Fi. Alright, ladies and gentlemen, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and I will catch you on the flip side. Peace. Growing your staking lately. Thanks. Peace, friend.